What is my interest rate? That is the question that every potential buyer calls in a mortgage lender with. But guess what? That question should be, how much is my rate going to cost me? I'm going to show you a couple of things today that you absolutely need to watch out for when talking to a lender about buying a home and asking about the rate. Because guess what? Not all rates are created equal. Hi there. My name is Ella Gurfinkel. I'm a senior loan officer of now over 30 years with Fairway Home Mortgage. The most hated question every loan officer gets asked is, what's my rate? What is the rate today? Where are the rates at? At the risk of sounding like an asshole, I don't know. Not because I don't know where the rates are, because I don't know what your situation is. The rates are always about your credit score, the program that you fit into and can get approved under, and how much you're willing or able to pay for the said interest rate. Let me break that down for you. All rates are not equal and are not one size fits all in the mortgage space. The rates are a function of what type of loan program you're applying for and can qualify for. The rates are a function of what your credit score is and how much money you're putting down. And then on top of that, you can pay extra money, discount points. And no, discount in this particular case doesn't stand for you're getting a break. You, my friends, are actually paying to get your rate lower. And that's what the discount points stand for. One discount point equals 1% of your loan amount. Let me say it again. 1% of your loan amount. So when you're getting quoted a rate, let's say of 6.25, with 1 point, that is 1% of your loan amount. So if your loan amount is $500, 1% of $500 is $5,000. That's over and above your normal and typical closing costs and prepaids, basically what you're paying upfront for property taxes, property insurance, and your partial first mortgage payment. Yes, I'm getting hella technical here, but there is a reason behind it. If your closing costs are $5,500 and your prepaids are, let's say, $5,000, that is already $10,500 that you're paying for closing costs and prepaids in addition to your down payment, unless your realtor can negotiate that the sellers pay for those two items out of their sale proceeds. Not every situation applies, obviously. Now, if you're starting to add discount points to it, now your closing costs have gone up from $10,500 plus $5K for the rate to $15,500. That's extra $5K out of pocket. Now, imagine if that rate costs now not $5K 1 point, but now costs you 2 points. That's $10,000 out of pocket. So your closing cost just went from $10,500 to $20,500. That's $28,500. So this is where all rates are not created equal. Let me show you an example. And yes, I brought props, and yes, these are two loan estimates. What you're supposed to get from every lender that you talk to, at the very bare minimum, is something like this. This is an estimated fee sheet. Lenders refer to it differently, but the estimated fee sheet, at the very bare minimum, needs to be a couple of pages with all the details. There's also a one-page form variation, a summary, where the fees are not broken down, they're bunched together so that you can see the totals. Now, why am I showing you this? If somebody's telling you the rate is X without backing it up with paper or run for cover, let me give you an example. About a year ago, I was working with a buyer out of Seattle, and somebody at his work suggested that he shops me with another lender. Great, bring it. He did. No names. Except for what he was getting was not an official fee sheet. What he was getting was straight up email bullshit from a loan officer at a different company. And that email bullshit, and the reason I'm calling it that straight up, is because that company actually had a page with a rate calculator on it. And when plugging in all of his information into that rate calculator on the company's official website, official mortgage calculator, official rate calculator, no less, the rates that were being quoted online were a hell of a lot higher than the BS email coming from a specific loan officer. The LO was never able to produce an official fee sheet. The LO never confirmed, other than via email, that this is the official rate and he can honor it. All he was saying, trust me on it. So it took an amazing team of real estate agents working with me and the buyer on this deal to actually get the buyer to see the light, that what he was being offered was your typical bait and switch situation where you're promised something until you're committed to them. And then once you start moving into the process and it's too late to switch lenders, that's when they have you by you nowhere. Because guess what? If you're 2 weeks into your purchase 30-day contract, it may be too late to switch lenders at that point, even if you're being screwed, okay? Not to mention that in the majority of states, you need to notify the seller and obtain their permission about switching lenders mid-flight, because that's a red flag to the seller. It usually notifies the seller that something is not kosher with your loan. They don't think something is wrong with your lender. They think something is wrong with your financials and your loan. And therefore, now you're switching lenders to salvage the deal. And now they're going to think, I don't have to honor that request. I don't have to honor that contract anymore because now you're in violation of the contract. That is where some bait and switch situations happen. This is where, again, little piece of paper, a fee sheet, a fee estimate is hella important. Now, there is another set of documents. Usually it's 3 pages. And yes, I have redacted some of it because it contains somebody's personal info. Plain cool there. This is a loan estimate. This is the document that you normally get by law within 3 days of going into a contract. So once a contract gets accepted, again, that contract gets provided by your real estate team to us, the lender, and we have 3 business days to trigger your loan file in our systems. Meaning put the address in, and once the address is input, it's a live transaction, it's a live file, and the 3-day clock starts ticking. Now, within those 3 days, we have to provide you with a loan estimate, which is again a federal document at this point, outlining all of your potential fees and costs associated with buying this property and obtaining the loan. So, loan estimate. Few things to look at. 1, are you floating the rate? Thing 2, is the rate locked? Typically on the same line. Now, where it gets even more interesting, not just the lock or float. I actually have conversations with my buyers, my clients, whether we want to lock, we want to float. You're in the driver's seat as a buyer. It's your money, it's your obligation, and it's your risk tolerance that we discuss and see where the market is going to on the rates, if it's going up or if it's going down. Of course, if the rates are on the up trajectory, then guess what? We're going to lock you outright. And the first point of no return when we can lock you is when you have an accepted contract. Now, it doesn't mean that you have to lock. Again, depends on your tolerance for risk and depends on the financial markets, specifically the mortgage bonds that the interest rates are based on. You can choose to float if the rates are on their way down. So you're basically waiting it out to get the best possible pricing, and you typically have about 10 days up until closing date to finalize the rate and the fees and the costs, the points that are associated with that particular rate. Now, this is where it gets super interesting. If you're not getting a loan estimate and you're already in contract, run for cover. That's a problem. Where it gets more interesting is where you need to start diving in line by line. Because what got me on this particular one is the lovely origination fees and the cash to close. So let's talk about a real life scenario, literally just happened about 2 weeks ago. And this one, it freaking got me. It had my blood boiling. Let me tell you the exact scenario, the exact numbers, so you can better understand why I was so hot and bothered about it. So, purchase price, $345,000. Loan amount, $315,933. The buyers were roughly putting down about $30,000. Amazing, right? About just under 10%. Great. Now, check this out. Cash to close, $62,096. Double the number that the down payment is. This, to me, is complete insanity. Now, here is my fee sheet. And the differences in the cash to close, almost $7,000 out of pocket. Total, $55,339.61. Here is where the rubber meets the road on the loan estimate. And the reason mine is a fee sheet and not a loan estimate, because the people never actually sent me a contract originally in order for me to be obligated to send a loan estimate. So a fee sheet because of that. Now, back to the original loan estimate that they received from the lender with a locked rate. This is where it gets very, very interesting. Closing cost details, loan costs, origination charges, $14,707. 2.405% of loan amount in points. Let me say this again. 2.4+% to buy the rate down. Gets even better. Origination fee, $7,108. Yes, I am doing a double take because that number 2 just freaking makes me mad. Double fees, masquerading, hiding the fees under origination line, in my book, is not okay. 14K plus in origination costs is not okay. All right? It shouldn't be okay under any sauce or any pretense. Let's go back to mine. And the reason actually mine is still decently high, I am not a fan of somebody paying $26K in closing costs, prepaids, etc., on a $315,000 loan. But the buyers were really after a specific payment they wanted to hit. So those discount points, meaning buying the rate down, was to a point important to them. Now let's do some math on the discount points and the difference in the payment. And that's the math I show literally every single buyer, every single client I work with, because if you understand what your return on investment is, or better, your break-even point, meaning the extra $7,000 paid towards the rate and the difference in the monthly payment, how little of a difference it makes on the monthly basis and how long it takes to recoup, meaning break even, that is the part I want you to understand before you sign on the dotted line for that extra point in discount. So, offer on the loan estimate, 4.898 interest rate. Interesting number, but okay. Monthly payment, $2,349 a month. Okay, not bad. My counter offer, 5.25%. We're literally talking about 3/8 of a difference in the interest rate. Monthly payment, $2,418.14. If we do the math, about $80 a month's difference. Rounded. Are you okay paying extra $7,000 upfront over a $70 or $80 a month's difference? Because if you divide the $7,000 by $80, how many months is it going to actually take you to justify the cash being spent upfront? Not all rates are created equal. Yes, you can get a lower interest rate, but how much are you paying for it is the more important question. Because yes, in this scenario, you are getting a rate under 5. But you're paying through the nose on it. I'm not going to pull a Biden's don't. I'm going to show you the numbers. I'm going to break them down for you so you better understand what you're getting yourself into. Because that lower interest rate on the smaller loan amounts doesn't really make that huge of a difference. And no, I'm not being cavalier here. I get it. $80 a month is $80 a month, but at what cost? And that is the bigger question. How much are you willing to spend? How long will it take you to put together that extra $7,000 to save $80 a month? That is a question for you. And that is the answers I would love to see in the comments, because most people don't have extra $7,000 laying around. And again, I get it. I get the monthly savings. I get the rates seem high. Again, at what cost? If you want a second look at your loan estimates or your fee sheets, I'll be more than happy to do it. I never charge a dime for it. It's always free. I will consult you. You don't have to work with me to get a review, but I do want you to understand what you're getting yourself into. I know I sound like a broken freaking record, but it has been literally the goal of my last probably 20 plus out of 30 years of my career is making my clients understand, helping them understand the flow of the numbers and understanding how the finances work. And at the end of the day, better financial literacy. And this is what it's all about. So if you need a second look, I'm here for it. Just DM me, leave your comments, send me your information. I'll be more than happy to connect with you and talk. Don't walk blindly into a situation like this, wasting your hard-earned money on something minuscule in a monthly payment. Thank you so much. I appreciate you, as always, watching all of my videos. I do put my heart and soul into every one of those because, again, I want you to understand things better. I want you to have more financial literacy. I'll see you in the next one.